Good morning, traders and investors. Roger Scott here, Senior Strategist for WealthPress. Today is Wednesday. It's May 10th. Where is this quarter going? Nobody's telling me what's going on around here. It's going by too fast. Anyway, folks, I'm the Senior Strategist for WealthPress, and welcome. It's about 7:47 in the morning. The market's going to gear up to open up in about an hour and 40-something minutes. My math is just not up to par. It's too early in the morning. Just getting back from Puerto Rico. Just got back day before yesterday. Yesterday was my first day back, and I'm glad to be back. I love taking vacations, but there's nothing more than I love than the market action. So as you can see here, the market's going to open up in a little less than 2 hours, and the Dow Jones is down about 55 points. The Nasdaq's down about 5 points. Everything is very, very random as we wait for the big daddy of all big daddies, the CPI data that's coming out in about less than an hour, in about 40-something minutes. Now, I want to show you what the big deal here is. Everybody's going to be talking about the headline number, which is supposed to be matching what we saw previously, which doesn't really tell us that inflation is moving in the right direction. It's just kind of telling us it's holding steady. And that's based on analysts' expectations. So I don't understand why they believe, the Fed believes the market's moving in the right direction, because this data is not. And here's the other problem. This is what the Fed is going to be focused on. This is the number that they focus on tremendously. And when let me just see if I can highlight it. The core CPI. Now, last time we had 5.6. If it is 5.5, they can, in good faith, pat themselves on the back and say that economy is moving in the right direction. What we're doing is helping. But what if it's 5.6? What if it's 5.7? Here's the problem. Mr. Squirrely Powell already said he's probably more than likely than not going to pause raising rates. Well, what if this number's 5.7? What is he going to do then? It looks like he kind of put himself in a corner. Now, I'm not suggesting the number is going to be worse, but he's really playing with fire. In my opinion, a better thing to would have done would be to say, hey, we're going to see what the CPI and the PPI is before making any decisions, but we reserve the right to keep doing exactly what we're doing. But he doesn't do that. He gives us false hopes, and then he pulls the rug underneath us, doesn't he, that Powell? Well, I'm watching you, you squirrely. But anyhow, we're looking for the core number to be at 5.5, just a hair below 5.6, and the headline number to match the last number from last month. It'd be nice if this was 4.9 or 4.8, and if this was 5.4, but I don't know if we're going to get there. The estimates are so close to last time's numbers, and they're so tight that it just looks like we're going to match last month's numbers. And if that's the case, then it shows that nothing is really happening, or it's happening a lot slower than we expect, which is not a good sign for the economy. At the same time, I want you guys to pay attention, especially when the report comes out. Pay attention to the bond, the long bond. This is the 20-year plus. Anything over 10 years, anything over 5-7 years is correlated about 95%. So if you're looking at the 10-year, if you're looking at the 20-year, if you're looking at the 30-year, they're going to be almost identical. I mean that. All you have to do is look at the futures, and you could look at the 10-year futures and the 30-year, and you'll see they mimic each other. So, and this TLT ETF mimics the long bond, which is why we're looking at it, because most traders here trade stock products, not futures. But if you trade futures, you could be looking at the 10 or the 30-year, and it wouldn't make any difference. It really wouldn't. So notice how we're at the bottom of this range, and we're actually outside of this range now. And I drew this yesterday, and we closed again outside. If the number is really, really negative, there's a good chance that the bond market is going to cool off, and which means higher rates, which means lower bond prices. So if you see the report and if you see the bond market lagging and going down, well, that means interest rates are actually going higher. Now, that's the 10-year, or excuse me, I keep saying 10-year. That's the long bond, not the 10-year. It's the long bond. Here's the short bond. And the short bond also has been moving down. It's still within a range, but if this starts moving lower, if bond starts moving lower, that means we're putting or seeing more pressure on technology stocks. And technology stocks have already started slipping, and I think they're going to go down unless there's some miraculous news that comes out on earnings, which we've already seen most of them report. So to me, it looks again like the Fed is putting themselves in a corner by announcing that they're not going to raise rates next quarter, because we don't know what the CPI is going to be like. But again, the core estimate is 5.5. The Dow Jones remains on the chopping block. Most of the blue chip stocks have been going down, as you can see here. Yes, they went up and then down, but the main trend from the high is moving lower. And as you could see here in a longer term, we're still in a very choppy market. And another stock asset that's moving into a choppy market is the semiconductor. Now, why is this very important? Well, the semiconductor and also consumer discretionary. Look at this. That's technology. Sorry, wrong sector. XLY. They're becoming choppy. They're starting to follow the bond market. That's not good for the market. Now, one thing it does is it lowers volatility, which is very positive, as I'll show you right now. Right here, you could see volatility is lower when we're congesting like this. This is the Dow Jones, but it's not good for trading range. The trading range, let me just go on a daily basis. The trading range went all the way from 700 points a day on the Dow to about 350 points on the day. It's getting lower. Now, that's because of the consolidation that we're having. If the market starts breaking down or goes below the 200-day moving average, volatility will start increasing. And I actually think volatility is due to start increasing because it's been moving down for quite some time now. Now, looking at the SPY, same thing, consolidation, and it looks like it's going to be moving lower because, again, volatility is mean reverting, and volatility has been going straight down for quite some time. And no, most analysts don't talk about this because they don't look at volatility, but volatility is very important because volatility is mean reverting, and it is now about half of what it was about, let's see here, about 7 months ago. So I think the market is going to start cooling off more. Volatility will go down. And this is also, by the way, look at communication services. Nothing here is above 50. Have you noticed that? Now look at infotech. Nothing is above 50. Have you noticed that? Now, consumer discretionary, you still have a little bit above 50. But remember, it's been really, really consolidating. It hasn't been doing anything. So we got to be really, really careful right now, especially when you look at technology and you start seeing a chart that looks like this. Now, here's the problem. See that? What's the catalyst for the next upside? I want to ask you that question. Bonds right now are literally sitting. Look at bonds. Bonds are about to weigh heavily on the market, as you could see right here. Lower bonds, higher interest rates. Higher interest rates, really, really bad for technology. So the way I'm seeing it is bonds are going to keep dipping, and it's going to take technology with us, and it's going to increase volatility. And while it's going to take technology with us, it's also going to take communication services with us. So I'm expecting lower prices broadly on these two sectors. Now, let's talk a little bit about sectors. If you look at industrial looks like it's actually coming up, or at least choppy here. It doesn't look like it's going down. It looks like it's going choppy. I like industrial stocks right now for the most part. I like utilities for the most part. Let me show you utilities. But I'm not big. See, it's going up right now. But I'm not really big on the speculative stocks like semiconductors, like consumer discretionary. I like consumer staples, but not consumer discretionary. But overall, be really careful because if this report is negative, it's going to cause the bond market to break down. Now, what I'm hoping for is that the bond market reverts back and goes back into its range. But to me, it looks like it's going to stick down here and stick lower. And if that's the case, and if it breaks down, it's going to put a lot of pressure on the consumer discretionary, communication services, and the technology sector. So be really, really mindful of that. Now let's talk a little bit about what the market has in store for us and what we're missing in terms of global economy, put everything together, and then I'll give you my favorite long and short plays. And you'll be surprised by what I've got in store for you today. Investors are looking ahead for crucial U.S. inflation report that could provide fresh clues on the future of Fed's monetary policy. That's the report that's coming out in 34 minutes. PayPal plunged over 12%. Now remember, PayPal is a very interesting company because it's a technology company, but it's also consumer discretionary. Remember what I always tell you, there's a lot of mix between them. Why is it consumer discretionary? What do people use PayPal for? They use it to buy stuff online, right? It's a payment processor. So it's technology and it's payment. But if PayPal isn't doing well, if people aren't spending money on PayPal, what is that telling you about consumer discretionary? And remember, people don't buy consumer staples as much online. They buy stuff from Amazon. They buy stuff from PayPal. PayPal is used for more speculative, more discretionary spending. So it was not doing well, and that's not going to bode well for technology and consumer discretionary. Top percentage loser on the benchmark after the payment company lowered its operating margin outlook. Now, they actually beat estimates, but their forward-looking statements sucked, and that's really, really bad, and that increases the odds of that recession that I've been talking about. So be really careful. Downgraded from Credit Suisse, that's bad. And also semiconductor stock weighted on the broader market with 5% drop in Skyworks. That's technology right there. I'm not bullish on technology, communication, and consumer discretionary for many reasons. Fed president, New York Fed president, I want to hear what he has to say. He said it would be particularly focused on how tighter credit conditions weight on the U.S. economy and left the door open to keeping interest rates on hold next month. I think that's a big mistake. I think he should have waited for the CPI number to come out before making that statement, because he may be eating his words. At the same time, top Fed officials did not rule out more rate hikes, while with inflation still above the target's 2%. I agree. Jefferson said Tuesday that U.S. economy has started to slow in an orderly fashion. Really? Well, I don't know about that. I'm not so sure that's the case. Is it slowing down because of a recession or because of what you guys are doing? You see, remember what I told you guys, that the result will be the same. They're not going to they're going to keep rates steady, but it may be for a different reason. They're going to tell you what they're doing is working, orderly fashion. But the truth is, it's because economy is slowing down on its own. That's why PayPal is down 12%, allowing inflation to decline even as growth continues. Yeah, growth continues? Really? Growth continues? Let's see what the CPI says today, buddy. Joe Biden, another one, failed to break a deadlock over increased U.S. debt limits, which are currently at $31.4 trillion. I'm not going to get into politics. We'd be here for too long. On the earnings front, Airbnb didn't do well. That means less people are traveling and booking travel arrangements for the summer. More of a recession. I smell a recession. I smell a rat. And again, today the core CPI and the regular headline CPI, and they're looking to see if it can be 5.5 or lower. I'm hoping that it can, but if it can't, they've got some explaining to do about how things are, what did he say here? Slow in an orderly fashion. We'll see about that in about half an hour, right? Mr. Williams and Mr. Jefferson. Anyway, I'm hot today. Europe everybody's waiting for U.S. inflation data. And I don't know if you guys noticed or not, but in the last couple of months, Europe has been really focused on the U.S. markets and not any other markets. They've literally been keying off of the U.S. economy, which is telling us that they're really dependent on the U.S. economy. China closed lower as investors sold off shares after disappointing April trade data continued to weigh on sentiment. China's weaker than expected import data held down stocks for a second consecutive sessions as investors worried that a recovery in the country was running out of steam. And that's also my big concern, because it's been tough for them. And remember, if China can't export goods at a good pace, and if we're not ordering goods at a good pace, that's a slowdown in the global economy, which again speaks to a recession. Japan closed lower today, retreating from a 16-month high as cautious investors locked in profits from previous trading sessions. They can't just say it went down. They have to give you a story. Investors locked in profits. Didn't half of them lock in losses? Didn't 50% take profit, 50% losses? I mean, I love how they spin this stuff. Twilio plunged. Twilio is not doing well. We used them for SMS alerts. Great company. Celsius, this is a flavored water company. I got to try them, actually. Rose 7%. I got to give them a try. And Southern Copper fell more than 2% after they were downgraded. Now, I would keep an eye on the stock because it's a basic materials stock. Speaking of basic materials, I want to show you guys the stocks that I'm bullish on and the stocks that I'm bearish on right now. And it's tricky. So I'm bullish on Walmart. Why? Well, Walmart is one of those companies where people go when money's a crunch. People don't go to Walmart to splurge. They go to Walmart to save. And yeah, they buy consumer discretionary things there, but they also buy a lot of consumer staples. And I'm very bullish on consumer staples right now because consumer staples is a very, very defensive play. So as you can see here, consumer staples haven't really been doing all that bad. I mean, they haven't been doing great the last few days, but they've kind of looking choppy. But I really, really like Walmart because Walmart seems to be doing well in this type of an economy. And look at that. It's making a new high. I think Walmart's going to get a lot more people coming in there and buying things from them in light of the fact that money is tight right now. And another company that I like is Republic Services. And that's an industrial stock. That's a waste management stock. And I also like waste management. So I actually like Walmart, I like RSG, and I like waste management. Those are three stocks that I like. Two are industrial stocks, and one is a consumer stock, but it's a very defensive. I would argue that it's the most defensive consumer stock in the world in terms of defensive consumer spending stock. So it is a spending stock, but I think people go to Walmart when they don't have a lot of money, they want to save a lot of money, or they're looking to start becoming more economical. So Walmart is definitely in play right now, definitely in play. You may want to wait for a little pullback, but I like the stock. Republic Services and Waste Management are doing the same thing. Industrial stocks are pretty hot. Now, which stocks am I not liking right now? I'm going to get a lot of nasty emails about this. General Motors. General Motors looks like it's on the chopping block. Look at this trend. It looks nasty. Nasty. And it looks like it's going to make another leg down. And another one, oh boy, I'm going to get a bunch of emails. Tesla. Tesla looks bad. It looks terrible. It's not as bad as General Motors in terms of the main trend, but it's below the 200-day moving average. It's in a downtrend, and it's got a lot of consumer discretionary spending. They're lowering their prices. They're not making anything new, and I'm not seeing any major catalysts, and earnings are behind us. And also, technology is overdone. So I think Tesla is going to come down and give us some downside corrective pressure. So General Motors and Tesla are sells. Walmart, RSG, and Walmart, Waste Management, and RSG are a buy. Mix up WMT and Waste Management. They have similar ticker symbols, WMT versus WM. So Walmart, RSG, and Waste Management are buys. General Motors and Tesla are sells. Now, remember, the report is coming out in 27 minutes. You don't want to miss out. Now, my good friend Chuck Hughes, folks, he's just exposed one of Wall Street's best-kept secret. It's a new way to potentially get ahead of the game. The way Wall Street invests is changing, moving all of its biggest transactions to a certain time of the day. And while they kept the secret buried for months, even years now, he just pulled back the curtain and revealed how the rest of us can target these power hour stocks. Chuck is a 10-time heavyweight trading champion. Today we have the CPI. You don't want to miss out. He's going to have a lot of very important things to say. Follow the link. Click the link below this video. Check out the presentation. If you can't find the link, let me tell you how to find it. Go to YouTube, type in Wealth Press. It's in the YouTube Wealth Press channel. I want you guys to like these videos, subscribe to our channel, and post comments. How do I communicate with you unless you post comments? I'm not a mind reader, or send an email to support@marketgeeks.com. Have a great hump day, and I'll see you guys later. After the CPI, I'll post something on the Telegram to just give you an update. And if you want to know how to subscribe to my Telegram channel, and you need to do that because I post pictures of Clyde there all the time, and Bonnie too, Bonnie and Clyde. Go to the YouTube Wealth Press channel. It's in the descriptor. Bye. Have a great day. I missed you guys on my trip. I'm back. Bye.